Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, April 7, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, we have a pursuit of yesterday's rally. If we take a look at the situation here, however, this rally on the Nasdaq has not allowed the Nasdaq to get out of this neutral range. On the SPY, it's the same situation as well. We're pursuing the rally, but remain within this neutral range. But the TSX though is way more stronger on the TSX because a lot of sectors are contributing to the rally, especially the energy sector. Oil remains interesting, remains volatile, remains into a bullish cycle. And if you take a look at this, this is why on MarketGurus.tv we have recommended HOU as a day trade of the day. Not as a day trade of the day, but as a day trade in MarketGurus.tv. One entry point here, one there on the break of that sideways formation, and the other entry point just came at 885 at 1220 on HOU. Now, what are the target for oil? Where could it go? Well, so far oil could reach at least 2051, so there's some potential though. So if you're buying HOU today, holding onto some of your positions, I still think there's some great opportunity there for day trading on gold, on oil. For the energy sector, the increase continues, the rally continues. What we have done on MarketGurus.tv is that we have held on to our positions because yesterday we decided to take some profit on the bullish ETF that tracked the energy sector, and that bullish ETF was HEU, where we decided to take some profit yesterday. Yesterday, if you did open some positions in the energy sector, there were a lot of questions about it. I think whenever you make a 5% on those positions today, it's great to trigger a profit-taking opportunity on those positions. It's important. That's the strategy that we're favoring on the energy sector. Now, concerning the sector's movement, there's only one sector I'm going to bring to your attention today, though. It's a movement that we have in the biotech and pharmaceutical sector. Not a lot of breakouts, but there's some stocks that are going up today, such as Fold that is breaking out, Endo Health that could break out higher than 92.60. Lanet, it's a breakout on that stock. So as an exit point, it's 62.21 for Lanet. Blue could break out higher than 127.39 because at 127.39, it will break that top, that resistance, and that will confirm a new signal on the upside. And Oncomed, I'd like to see the stock breaking 28.26, so it's only a rebound right now so far. And QIAGEN, it has to go above $26 to confirm a breakout. So those are the stocks that are moving up on the NASDAQ. This is why the NASDAQ is able to maintain its rally. But on the TSX, it's mostly the energy stocks that are again leading this morning's rally. Now let's take a look at some questions that we had yesterday. We had some questions from Stefan here about ACQ. Would it be the good time to jump in ACQ? Well, ACQ, no, it would not be a good time because ACQ remains within its downward trend. The company here dropped after they posted weak earnings. They were expecting that the low oil prices will impact their auto sales because people will have less money because a lot of job loss due to the low oil prices. And this is why Air Canada dropped. Now, as long as ACQ doesn't reverse its downward trend and goes above $36, we definitely cannot expect an entry point on a stock like that. Yes, we have seen a wave of buyers coming on there, but this wave of buyers will only bring the stock towards 36.41. So me, I'd like to see a clear reversal of that downward trend before even considering to buy ACQ. Also, knowing that their last earnings report were due to the fact that a lot of sales have dropped due to the low oil prices. Well, we have to see, can those effects, are they going to be mitigated for the next earnings report? And for me, a clear signal, fundamentally speaking, will be to see how their next earnings are going to be. But technically speaking, to confirm that they're back on track will be to see the stock reversing its downward trend and go above 36.41, and it's not doing so for the moment. So it's not an entry point on ACQ. Now CPG, okay, so we're gonna take a look at CPG here. It's on the TSX. Sure about that. So it was a question from yesterday. I only have 20 seconds left, so I'm gonna detail that. Take a look at the information that you mentioned, Dan, and give you the answer in the next segment. Back, folks. So Dan bought CPG 600 shares in breakout at $29.95. Okay, around this area. Exit at $32. Yeah, it's great. Exit at $32, which $32.50. You know, I would wait. I think it's definitely a great timing for 32 because it will reach that resistance. So far, I'm not sure you're making 5% on that stock, but definitely that's a great strategy. You bought in the breakout when the stock got out of this sideways formation. Good entry point there. The stock still has some momentum because it's reaching an overbought situation, but it's not there yet. I mean, it's not reversing towards the oversold situation. The 10-day, which is in red, has just crossed the 30-day moving average, which is a bullish signal also as well. Yeah, I think volumes are still increasing with the MACD histogram. So 32, 32.50 will be the point where you should trigger a profit opportunity on CPG. But it was a great entry point, and it's a great point where you should take some profit. So good job there, Dan. Now PTG, PTG Andre, PTG, Pivot Technologies. Is it a good time to get in? It's not a good time to get in because the stock remains neutral. If the stock can go above 42.90, okay. But so far, it's a neutral situation. We have clearly a wave of sellers that's really present in that stock. Look at here on the stochastics. The MACD histogram also as well has reached an overbought situation. And this is a clear bearish divergence because look at this. We went here on the MACD histogram. No, sorry, it's not a bearish divergence. It's not a bearish divergence. Forget that. I made a mistake. So it's not a bearish divergence. The thing is, the fact that the MACD, the stochastics are all overbought, for me, those are all signals that it's not an entry point on a stock like that. I think we're more due for stabilization phase, and then higher than 42.90, that would be a go for a stock like PTG, but it's not a go right now. Now, okay, sorry, Chris, so you were mentioning PKI, Stefan. So it was mostly yesterday. Yeah, so yesterday it was an entry point. Yes, the stock did break out. We did recommend it on marketgurus.tv. And now, would you get in today on that stock? No, I don't think it's appropriate. I think right now the entry point ideal was yesterday. Now it's just a pursuit of the rally. if you're getting in today, it's still a second day movement, which means that if you're getting in today, your loss potential is becoming way bigger compared to the entry point of yesterday, because you're going to have to get out at 24.63. And if you're getting it today from 25 to 24.63, it's a bigger loss potential compared if you bought it yesterday around 25.26, right? So this is the thing I don't like on a stock like that. But overall, it's a nice stock. The trend is maintained on the upside. Definitely have nothing negative to say, except that at 25.40, that's the point where you should get out on a stock like Parkland Fuel. Now, Jocelyne has a questions on Delphi Energy. Oops. Too late to buy? Yes, it's too late to buy. It's too late to buy, Jocelyne. The stock has already made its rally. Look, it has been going up for the last month without even stabilizing. So definitely it's too late. The stock has went way above its 100-day moving average. Now it's stabilizing. Now it's overbought. So yes, it's too late. Wait for a clearer stabilization phase, which it could begin now. And then if it could stabilize, make a new breakout, okay. But right now, with a stock that is maintaining its rally for the last month, unstopped, I think that it's definitely too late to get into a stock like that. It's all about getting in at the beginning of a movement, and getting in right now, you'll be getting at the end of a movement or at the beginning of a stabilization phase on Delphi Energy. So I think it's definitely too late for a stock like that. I'm going to take another questions here rapidly, and after I think we're going to go to the break. For day trading, do you favor 5 minutes or 1 minute charts? At the beginning of the trading session, usually we use 1 minute on MarketGurus.tv, but after that, around 9:50, 10 o'clock, we usually switch to 5 minutes to give us more perspective. And one thing I like to do is that if I'm going to, for instance, day trade a stock, I take a look at the stock with a 5 minute period, 5 minute chart, 100 period, and sometimes I put 30 minute, 250 in order to give me some perspective to see where is that stock compared to the last trading days. So I know that if the stock is breaking out opening, is it an entry point? For instance, in BNK Petroleum, at opening it was a clear entry point because the stock with 30-minute period definitely got out of this upward corridor. So that was definitely a clear buying signal on BNK Petroleum. So for me, that would definitely be the strategy I would favor. 5 minutes after 9:50, and usually use 30-minute period to give you a more bigger perspective to see is the entry point appropriate on a stock by taking a look at more data on the stock.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So we have one question here from Andre. What's going on with AGU? Well, I have no news on AGU, Andre. So far, AGU, it's staying neutral, testing a support. Oversold, yes, yes. Oversold, yes. Oof, man. Will that be an entry point on AGU? Could definitely be. Right? Could definitely be. With all those oversold situation on the MACD, on the stochastics, and even if we put on a yearly basis, let's take a look at this. Okay, not yet on a yearly basis, but yeah. You know, the thing is, if you're buying AGU right now, the exit point is not too far away. It becomes at 128 below that support, right? On AGU, that's the good thing. But there's a risk that we might stay within this oversold situation for a while, because I don't know what could propel AGU higher so far. The stock remains within a downward trend, but I think building up your long position, putting an exit point at 128.27 could also be something that's good. If you do have a, not say the medium to long-term environment, but at least, yeah. So 127 as an exit point on AGU if you're getting in today, because you will buy that stock at a support. It's not yet a breakout. It has not yet reversed its downward trend, but by getting in it now, your loss potential is becoming more limited. So you're gonna have to get out of it at 127. Now, Isabel has a tough question for us. Can you analyze HGD? I want to know if it's a good time to buy. Thank you. Well, it's a tough one. The thing is, gold is one of the only sectors which is not contributing to the morning's rally in the TSX. We see gold, the gold sector has been declining. Gold has the potential to pursue its decline. Gold could even reach 115. So there's definitely a possibility to come retest that upward trend. Those 50-day, 30-day, and 10-day moving average on gold. There's that possibility. So for HGD, if you're getting in now, the stock, the ETF remains within a downward trend, within a sideways formation. But if you're getting now, putting your exit point at 1060, 1070 could be appropriate. With an exit point at $12 whenever we reach the top of this downward trend there on HGD. We do not have yet a stochastic that's tilting towards the overbought situation, but putting your stop loss at 1070, it's not a big loss potential on HGD. It's a little bit ahead of the confirmation of a movement, but if you bet that gold could continue to go down, as I said, I believe that gold GLD could reach 115. 1070 as an exit point on HGD gives you about what, 3 to 4% loss potential. $12, about 8 to 9% gain potential. So the risk reward ratio is becoming interesting on HGD. But so far, the correction on the gold sector makes HGD looks favorable, but make sure that at 1070 you get out, Isabelle Jacques, on that stock, on that ETF. That would be my advice. Now into HOD. So Rick, this is definitely oh, you want to get it into HOD? Okay, so for HOD, so why HOD? Why HOD? Look, so far there's definitely more stuff that could allow oil to continue to go up. I don't think it's appropriate to get it into HOD now until oil has not reached at least $20. So as long as USO has not reached $20, for me it's too premature to get it into HOD. I think there's probability that HOU, which is the bullish ETF, continues its rise until $20 for 8, because USO has the potential to reach that. And I think if at $20 we're starting to see stochastics that's starting to tilt towards the oversold situation, then you might consider HOD. But right now, it's kind of too premature to get it into a stock like that. Now I'm going to show you here the best breakouts of the day. Those are the best breakouts that we found. RVX on the TSX, Twitter, Merge Healthcare, and Xenoport. And as for the day trade of the day, it's a stock in the healthcare sector. I've shown you the movement in the biotech earlier today. So that stock here, RIGL, gave some nice entry point. One here, one there, another one here, another one there. Gave one here, but those of you who got in here or there though, right now you're at risk. If ever the stock goes below 395, you're gonna have to close that positions. However, let's hope that the wave of buyers could come imminently to allow the stochastics to come back towards the overbought situation and allow the stock to have the reversal of this downward trend. So if ever we could have stochastics that tilts more towards the overbought situation, then those of you who bought that stock at $4 or at 404 on the break of those sideways formation, well then you'll be saved. But right now you're definitely at risk on a stock like IRGL, and this has been our best pick of the day on MarketGurus.tv. So overall, folks, today it's a strategy where those of you who bought some stocks in the energy sector, if you can take some profits, do it. If you cannot yet, be slightly patient, but make sure you put your profit taking points on your positions, because the energy sector is the only one who is, not the only one, is the leader in the pursuit of the rally on the TSX. On the American markets, some biotech stocks are standing out, but it's not a widespread, clear bullish signal. And gold stocks are having a correction today. HGD could be interesting. As I said, 1070 should be the exit point if you're buying HGD today. And so far, make sure that at $12, you take some profit on your positions on HGD. So I wish you all a good trading, and see you tomorrow on the Swing Trading Show on DecisionPlus.com.